Hey guys, welcome to another video. If you're new here, I do in-depth stock market analysis videos on all kinds of different things, disruptive tech companies, SPAC mergers, penny stocks, dividend stocks for passive income, but none of this is investment advice. This is just an opinion channel about money. So on this one, I want to tell you about a penny stock called AQMS. This was actually a request from somebody in the comments, and it caught my eye because when I looked into the stock, it had a pretty interesting story. I want to do a bull case versus a bear case on this one. So I've got 5 points supporting the bull case, another 5 supporting the bear case. And at the end, I'll sum it all up and give you my opinion on which one wins. Let's get into it. So essentially, this company is in the business of recycling what are called lead acid batteries. So these batteries have been around for like 160 some years. They're the typical battery that we see in our internal combustion engine based vehicles. And they're actually the same lead acid batteries that are still used in electric vehicles today, and probably will still be used in EVs for the foreseeable future because they actually perform better in the cold. And there's a couple of other engineering reasons why they haven't yet been replaced in EVs, and that's a problem that I don't think will be solved anytime soon. So we're going to be stuck with lead acid batteries for the foreseeable future, and we absolutely need a way to recycle the things. So that current process uses smelting. Basically, the batteries are broken apart physically, and then the lead goes into this massive smelter, and it's melted down and reclaimed. Lead, however, is super toxic. It's really, really difficult to deal with, and there's a lot of regulatory pressure on these recyclers to clean up their act and stop polluting. And that's where Aqua Metals comes in. So they've been working on a clean technology for recycling since 2014. It's based on a process that uses water and electroplating to recycle lead at room temperature. So the whole smelting problem essentially goes away. And really their story started just after that in 2015. They went public, they did an IPO, and their plan at the time was to build a demo plant to essentially work on improvements to the technology, make it commercially viable, and use this demo plant to actually demonstrate that commercial viability and then get buyers interested. And basically everything went wrong at that point. So, there were a lot of delays in their ability to advance the technology. In 2017, they were hit by a bit of a short seller attack that hit them at the same time where there were some key delays and things weren't being delivered, and the stock absolutely plummeted. And that sort of brings us up to the present day where there's a little bit of a news story here in terms of a potential turnaround in the business, a new business model. And the news has really caught the attention of some investors. And just over the last little while, the stock shot up from $1 to almost $4. Okay, so let's take a closer look at the company, why that is, and what are the bull and bear cases on this one.
What's the upside potential?
So the number one thing driving this one right now and all the excitement is the key news on these efficiency improvements. So basically they released the results of the next generation technology in their recycling unit. And essentially the output from the recycler, the amount of lead that this thing can produce, essentially doubled, which was way more than they were even expecting when they went into this particular phase. So fantastic news on the actual output side. Similar story on both the build time and the build cost for the recycling units. It looks like it's about half the amount of time and half the amount of money to actually produce these things. And a similar improvement on the actual operating expense. So they kind of come up with additional automation. And this is really, really key because it is basically the thing that was holding them back up until now in terms of commercial viability, because the margins in this lead recycling business are pretty thin. You don't make a lot of money doing it. And if you have to license this technology or buy a unit from this company, that's going to further reduce that margin. So, their potential customers were looking at this and sort of saying, in terms of commercial viability, if I have to pay you a license fee for this thing, that's going to eat way into my margin here. And I'm going to go from not making very much to not making anything at all. Potentially, this news has totally changed that efficiency picture and made the value proposition completely different and way more attractive to their potential clients. So it's really, really big news. Now, the lead market itself is also a good story for anybody that's in the business at all, whether you're a miner pulling it out of the ground or whether you're actually pulling it out of recycled batteries, the demand for lead is forecast with really, really strong growth. We're going to continue to need a lot of additional lead acid batteries into the future, and we have to get a large portion of that from recycling. Basically, the output from these lead mines is relatively static. They're not pulling more out of the ground, and it's actually mandated by law that you need to recycle these lead acid batteries in a lot of jurisdictions. So there's money to be made in doing it, but there's also regulatory pressure forcing companies to do it, which is a great story in terms of the market opportunity. And at the same time, there's a lot of regulatory pressure on traditional smelting technologies. Nobody wants a lead smelter in their neighborhood. It's absolutely crazy in terms of the amount of health impacts that it tends to have. It's a really, really dirty sort of technology, and it's really difficult to manage the resulting downstream pollution, and it's costly. And in some parts of the world, where regulations are a bit more lax, it's being done, but it's a future problem then for them to clean up as well. So into the future, I think the pressure on these old smelting technologies is going to push people towards cleaner tech, which is a great news story for these guys. They had some good patent news just recently as well. I think they were kind of struggling with their patent applications in the past. Ever since 2015, they've had a number of patents pending. And just recently, in late 2020, they had 3 key patents that were finalized and approved. And there's a lot more in the pipeline in a lot of different countries. So, patents are really hard to understand. Sometimes they're way too specific. Sometimes they're not really defensible. Sometimes they're too similar to somebody else's patent and they're not going to hold up in patent litigation. But I do think that given the fact that they have these additional patents secured now is a really key piece of the puzzle that's now fallen into place for these guys as of late 2020. And the last point here is a potential new opportunity in terms of lithium recycling. So of course, these new EV batteries are all lithium ion, and there's really no good solution in place whatsoever for recycling of lithium ion batteries. There's a lot of people out there that are looking to crack that particular problem because it is also a very, very big market opportunity. It may be that this company is in a position to capture a piece of that. It's possibly a logical extension to their technology and to their business. So could they be a player in this one in the future? I think they could, and a lot of people are excited about that possibility. The CEO here actually brought it up on a conference call. It's early stage, it's pie in the sky. Who knows what could happen, but it's certainly at least on the table for these guys.
Let's talk about risk.
So number one is that these guys are attempting to pivot their business model to a capital light licensing sort of deal with battery recyclers. They don't want to actually be in the business of operating battery recycling plants because it's incredibly capital intensive. They don't really see a viable path forward with this. They want to actually license their model to other people and have them incur those capital costs and then pay them a royalty fee. So it's a great idea, and it's attractive from a shareholder standpoint because it sort of removes what would otherwise be a brake on growth. It's really, really difficult to find the capital to fuel that kind of capital intensive growth. So a licensing model sounds like a good idea, but it's completely unproven. There is nothing in the history of this business or in this company to suggest that licensing model would actually work. It's a huge risk factor. Now, the recent improvements to the technology in terms of that viability, that's a key driver on this one because it suggests now that it may actually work, but we have no proof yet that it will. That proof could come in the summer of 2021. That is apparently when Clarios, which used to be Johnson Controls, they're a big battery company, that's when they may or they are interested in adopting this licensing model. So we'll see if they actually do in that time frame. But the absence of a firm deal, the absence of a committed date from anybody, even this company, is a troubling sign at this point. You would hope that they would have something locked in, and they don't. So the complete and total lack of any certainty around lithium recycling and the opportunity is a problem because I think it's a component of what has driven the recent surge up in the stock price. I think people are buying into the hype that maybe lithium recycling will happen for these guys, and there is absolutely nothing to suggest that. There's a lot of tech startups that are looking at lithium recycling. There's a lot of bigger companies out there that probably have a huge head start on these guys in terms of lithium recycling. So, I think if there is that hype premium built into the stock price, then it could be a mistake. So I mentioned this short seller attack in 2017. It was actually a really, really well-written article that's up on Seeking Alpha. If you have Pro, I would suggest going to read it. It's a good read, and I think they raised a lot of really alarming things about the company, which is typical in these bear articles and these short seller sort of articles. They go in depth into a very, very one-sided negative story on the company. That attack was largely based on previous failures to commercialize the technology. They pointed way back in time to when the founders were first starting to work on the patents and the early stage technology, and they pointed to a repeated pattern of these guys overpromising and under-delivering, right? So big announcements about disruptive technology, changing the world, lead acid recycling, blah, 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 but then nothing happens, right? And they're right, that was the pattern that happened over a significant number of years. But really, when I look at that, I don't see that that's all that unusual with these brand new technologies in these very early stage startup companies. It's kind of the nature of the beast, right? You have founders that are super excited about what they're doing, super excited about the opportunity. They're maybe overstating it in their own minds and in the statements that they make. And then, reality bites, and it takes a long time for this stuff to work. So I don't think that that's anything particularly unusual about these guys. Point number 4 here is this agreement that they're talking about right now in the news with Johnson Controls, which is now called Clarios. This agreement isn't new. They've had an agreement with these guys, or a strategic partnership, or whatever it is, since 2017 when the stock price collapsed. And it was actually a part of the reason, I think, that it collapsed back then is that the deal wasn't really going anywhere, right? They weren't able to advance it. And kind of alarmingly, it looks like right now the deal is still not all that solid. We keep hearing all this soft language on the deal about they're interested in, or they're looking to, or that kind of thing. I don't want to hear that. I want to hear that there's a firm date when this will happen and this revenue will come in and all that sort of thing. And that's not the case. The last point here has to do with the mechanics of this licensing model. Although it's attractive from a CapEx light standpoint, I think it means that the future growth of the company is largely in the hands of the bigger companies that choose to license the technology. So how quickly are they going to move ahead? What are their expansion plans? What's the take-up going to be in additional companies that may or may not choose to license the tech? In any sort of licensing or royalty-based model, your growth is completely dependent on the downstream companies that adopt it. It's not really under your own control. And so that's a really big question mark in terms of these guys' ability to grow in the future, and at what rate they're going to be able to grow, if at all. Okay, so in summary here, I think the strongest point on the bull case had to do with that really well-written bear case article on Seeking Alpha, and the points that they raised as part of that short seller attack back in 2017. I think, though, that a lot of the concerns there around commercial viability have now been mitigated. So if you believe the news in terms of these efficiency improvements, and I think we have every reason to believe them, they certainly seem to be viable at this point, then a lot of that bear case argument falls away, which I think is a really powerful thing for the future for these guys. But of course, the biggest risk remaining is their ability to execute on this new licensing model. And if you were to buy these guys today, you're absolutely taking a bet on their ability to make this licensing model work. And as yet, it's extremely early stage and unproven. So that's where all of your risk is coming from. So to my mind, the bull case does win here because of the strong technology, because of these improvements, and because of a potential inflection point in the company, and because of a potential turnaround in a beaten down company that could be poised for a ton of growth. That's a really, really strong bull case argument, and I think it can absolutely overcome the weaknesses that this company has. So yeah, the bull case does win for these guys. One last thing I want to say, guys, about penny stocks in general here is that really, I think personally, the way to invest in these things is to spread your risk across a lot of them. That's what these venture capital firms do. It's what angel investors do. They don't pile a ton of money into just one of these guys hoping he's going to rocket to the moon. They spread their investment over a fair number of these things, and so it really mitigates a lot of the risk. That's my own approach to this as well. So if you join my Patreon, I actually post weekly my top 20 penny stock picks up there according to a screening and ranking methodology that I use. I've explained that methodology in a video, and I'll link that above here so you can go check it out and learn how I do this. And that's really meant to serve as a starting point for your own analysis to find some of these buys and spread your risk capital out across a number of good candidates. And that's it, guys. That's the story. If you like the video, please throw it a thumbs up, subscribe, ring the bell, and I'll see you on the next one.